Good morning, Thursday. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great day yesterday as we are seeing a humongous swing in the markets on the Russian invasion of Ukraine. We've seen a very large move in the markets. Yes, I think a large part of this was priced in. I think this is the market expecting it, but certainly we are seeing a pretty big movement on the eventuality of the invasion. So let's go ahead and take a look at that for today. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get all the alerts and the updates and you don't miss anything that we put out here on the channel. Okay, let's dive in. So S&P this morning is down 91 points, 2.2%. The NASDAQ is down 2.7%. So the NASDAQ is down about 0.5% more. I'm going to start with the NASDAQ today because I normally start with the S&P. But one thing I want to point out in the NASDAQ, from the NASDAQ's high, and we measure typically from the high in this case, we are down over 22%. So that means that the NASDAQ has officially entered what would be considered bear market territory. It is down in bear market area on the NASDAQ pullback. The S&P is not quite there yet. So the S&P from its high is down, I want to say more like 13%, 14.5%, 20% in the S&P would be down here around 4,000. And so when I'm looking at where's our next real strong reversal area, certainly I'm going to be looking at supply areas up above me. Now we're down 2.5%, so we're nowhere near any of the circuit breaker limits or any of that, which we hit a number of times during the initial phases of COVID. But I will say this, yesterday we looked at this and said, if you want to get short, your trade is a breakout below this 43.12 line. And if you took advantage of that, then you got a pretty nice move. Now there was a little 15, for those of you that were more aggressive, a little 15-minute area of demand if you wanted to take a confirmation, but it cut through the level before getting there. That just showed further weakness, and it just traded down throughout the entire day. We saw a tremendous amount of weakness happen throughout the day. Now, as I look at, the demand levels below me, we did find a little bit of basing there at 42.13, and this was a prior area that we had seen price bounce in, and this was our kind of our swing low for our prior follow through day, and that chopped right through. So those were the January 24th lows that were cut through. So cutting through those January 24th lows are also a pretty telling factor. So now looking at where we are, looking above me, I would say that the supply area up above me that I'm first most interested in is that prior resistance point, right? Or prior support. Old support oftentimes acts as new resistance. So I will think that this level up here is going to be pretty good. Now, certainly we have this area right up in here, which was formed in the morning, but the actual invasion force that happened when it dropped, we've actually seen the market stabilize since that occurred on the announcement of European sanctions. So President Biden is supposed to speak today at noon Eastern time. So we will see what his remarks have, if anything, to do with the markets. But I would say, certainly, I'm not looking to try to pick the bottom here, right? I'm looking to find long opportunities. But remember, a wise man once said, be greedy when others are fearful and be fearful when others are greedy. And I would say that this is probably our next best daily demand area down here, around 4,000 would be your next best daily area of demand to look for a long. It's a pretty good pullback area. It's hot. It's a whole round number support and a place that we could see a turning point. But ultimately today, I'm going to be looking primarily at shorts, riding the wave as it comes up and holding on for those bigger moves. The NASDAQ as well, don't expect any demand levels below us to hold on the on the hourly or smaller time frame. We certainly got the breakdown trade yesterday. It continued to fall from that region. I would say that your best supply area is this one up here. I'd say that your best supply area is 13,769 on a chart. Don't know that we're getting there anytime soon. You certainly have this area up here as well, 13,885, 13,541. but that's still 200 points away from where we are right now, right? So we still would have to have a 200-point rally, which would erase about half of our losses for today. If you're a little bit more aggressive, you can take this whole region. If you're a bit more conservative, then it might make sense just to take this area in here. Later today, I'm going to be doing our options live trade rooms. So we will also look at these during our options live trade room today to see what are some individual securities that are going to give us some opportunities. If you're not a member of tradersarmy.com and you'd like to join our options live trade room, go to tradersarmy.com, take a membership, see what it's like. Hopefully, it's something that you will see a lot of value in. I think the members that we have do. All right. Looking at the Russell 2000, we get a rally back up. I think this is the cleanest level in the Russell right there at 1936. But I wouldn't really look for any of the demand levels below me to hold, right? Don't, you know, don't take these demand levels as something that has a lot of validity to it. Now, I will say this, interestingly enough, this is an old demand area from further off to the left here in the Dow, but that old demand oftentimes acts as new supply. And so I'm going to leave that area in here right there at 33,000 in the Dow. So those would be my four areas: S&P, Nasdaq, Russell, and Dow to pay attention to. The next one would be to talk about crude oil. Now, we spoke about this um, the other day, and I said, listen, I'm looking for a weekly reversal candlestick up in this 10-year supply area, which is really what it was, right? We've got this huge supply area that was formed from way over here. But notice that we've now cut through that area without getting a lower low on a weekly chart. That's the key. We never got an entry, right? We never got an entry on here because we didn't get a lower low on a weekly chart. And our daily charts, our hourly charts, we did get a little 15-minute reversal point here yesterday as price did come into that region, sold off for a nice little move. But then throughout the day, as we started to creep up, and then we just exploded straight up from the right from the initial wave on that invasion force entering into the Ukraine. So the origin of that move would certainly be right here, right? This is certainly the origin of the move. And on a pullback, I would still look to 96 as a place that's potentially a decent little long area. You've got this upper wick right here, and then a drop back there. If we look at that on a 15-minute chart, it's pretty sloppy. So I think 96 would actually still be your better kind of reversal point. Gold also shot up pretty high in the overnight as we saw the movement happen in gold. Origin of that move would be this area right here. So we're looking at both of those from an origin perspective as levels where we may see price return in the future. Taking a look at some of our currencies, specifically the euro would be the one that I would pay the most attention to, and we did get a strong breakout trade from a level that we had prior identified. A little bit of basing in front, very strong move away. Came into what, frankly, was a pretty clean area of demand. Now, that area of demand, if you look at it on a 4-hour chart, you're in a downtrend, has to be a confirmation entry, and we came close to it, didn't get in, rallied up out of there. That actually was a good demand. I think had we not seen that, the parabolic price action we saw, that level would have been very strong. But certainly a bounce away, and then we cut right through it like a knife through butter. So looking at supply areas up above me as places to get short, I'm going to look to this little itty bitty wick over wick right here. Little hard to see, but a prior area that we bounced off of through here, and a little wick over wick region right in there. I think you may get a decent reversal. That's 1.12117 by 1.12179. U.S. bond markets certainly took a strong rally up. 30-year gapped higher, 10-year strong move up. Certainly the flight to quality is in play. You're seeing a lot more on that flight to quality front right now. Great British Pound also fell. Every currency fell. Japanese yen actually held a fair amount of strength, but all the rest of the currencies dropped pretty harsh. Crypto also, Bitcoin did fall below our breakout line that we spoke about yesterday. We did get that breakout of this area. Keep an eye on this acting as resistance as we head higher. Let's look up a little bit higher to see if this becomes a turning point right there at 37,303. Now, I will say this before I head out for the day. Nobody, and the rock means nobody, should be surprised at the market's movements today. There is no reason for anybody to still have been in their long positions if you are a regular follower of the channel. We've talked for a while now about the fact that the markets are in a downtrend. We are net bearish in our overall positions, and we would anticipate continuing to see the markets drop. So certainly, but we don't want to see a conflict. We don't want to see a loss of life. We don't want to see an invasion force heading into another nation. I mean, I've that's way beyond my scope of knowledge and control. Anything I can do about it, other than make my voice heard and say prayers. But I can say this: when it comes to your own economic situation and finances, the trends will oftentimes give you a clue as to what you should do ahead of time. And that's exactly what happened here, right? We were already in a weekly downtrend. We were already in a daily downtrend. And so this additional 2% should not, have been overly surprising to people. I would not be surprised to see what I call a snapback rally day, right? If you go back in time a little bit, all the way through COVID, we saw 3 days here, 1, 2, 3 days that were snapback rally days. I want to say at one point that one of these days was the single highest up day the market had ever seen in terms of points. And so one of the things that I'll say is don't get lulled to sleep by a snapback rally day. Just use those big snapback rally days as opportunities to get short until we're proven that the trend has changed direction. So that's all I have to say today. If you guys have any questions, please send us an email, support@tradersarmy.com. Until tomorrow, everybody, see ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.